Hi, everyone. Welcome to DomainSherpa. This is an episode of DomainSherpa Weekly where we talk about current events as they relate to things that impact our space, our industry, and our world. Today, we've got Shane and Drew on the show to discuss GameStop, Wall Street Bets, Robinhood, Bitcoin, NamesCon, and a bunch of other things. It's all happening now, so let's get to it. What's up, everybody? Welcome to DomainSherpa. My name is Jonathan Tenenbaum. I am your host and producer. Today, it's a DomainSherpa Weekly, which we are running these weekly shows to talk about all things related to domains, crypto, investing, any digital assets, or anything else we feel like talking about. As we say here on DomainSherpa, all roads lead to domains. So if it makes money, or there's a chance for it to make money, we're probably talking about it. Here I got my two co-hosts with me. I got my boy Andrew Rosner, fresh off of his fifth in a row, #1 domain broker in the world, Craig, which was just announced yesterday at the NamesCon conference, which is quantifiable escrow.com, the #1 escrow service for the domain industry based on numbers. This is not a popularity contest. It is just cold numbers. My man is #1 again. And so big shout out to Drew. What's up, my dude? All right. And I also got my man.
I need that cigar like LeBron.
Exactly, man. Exactly. And I got my man, Sugar Shane Culture, Honey Shane now with bhouse.com. But Shane is basically the co-host of DomainSherpa Review, but we try to pull him in on these weekly shows. At least that's the plan when we can get him. But Shane is up here in the building. What's up, dude?
Good morning, and if we're taping in the morning, which is a different time for me, so I still got energy. It's going to be a whole new level now.
You're working off that. Oh wait, what is it? The royal jelly. You're working off the royal jelly right now.
I was looking into that. I was like, man, how can I steal that? I found out a little bit more about that, but we'll talk about that different time.
Yeah, different time. We talked about that on one of the previous Domain Sherpas. Go check that out. Yeah. Anyway, bhouse.com, Shane DSAD. Domain Shane, subscribe to the list, like make it happen, make yourself rich, follow Shane, anyway. Yeah. So just diving right into it today, this week, the biggest thing that everybody's talking about that we got to talk about is game stonks. You know what I'm saying? So it's GME, GameStop, all the craziness. So I guess, does one of you want to kind of recap really quick? I think most people watching have some general sense of what's up, but does somebody want to give the 30-second summary on where we're at currently, what got us to this point, and what the deal is?
Yeah, I mean, yeah. So basically, what happened is they looked. There's a Wall Street Bets subreddit that found out which stocks were the most shorted stocks listed, and they attacked it. And there's one way, it's called a short squeeze, and when they buy stocks, the shorters lose. So every time a person buys another one, or you buy a call forces the other side to buy stocks to offset that call. And so every time you buy a call, they got to buy a share. Every time you buy a share, it goes up. And the more it goes, the more it hurts the person shorted. And when you short, the upside is only to 0, but the downside is as high as it can go. Yeah. So they just pounded on it. And just
if it's a naked short.
Yeah, if it's a naked short, but I mean, it can only go to 0.
That's what they were doing.
Yeah. But if it's wherever it was at 20, they could only make $20 a share. But if it goes to 800, they can lose $780 a share. So they're on the wrong side of limitations. And this group picked on it, and then they started playing
the wrong side of asymmetry.
That's right. And they played the game of what do they like. If it was something that they enjoyed as a kid, they attacked it. They saw Tootsie Roll, Tootsie Roll, like, hey, we like Tootsie Rolls. It's shorted pretty heavy. Let's go roll that. American Airlines, things that were comfortable brand. Bed Bath & Beyond. I'll never forget, there was a tweet that said, man, I'm all in on Bath & Beyond. By the way, what's Bed Bath & Beyond? They no clue. But that's the stock market, man. As a trader before, it's a buy low, sell high based on mathematics. But the thing that changes everything is the craziness of emotion and just crazy. I mean, people can do anything that you can't put down on paper and mathematics isn't going to solve. And we're watching it now. And I love it. It's absolutely the most fun thing in the world. It's also the way to lose the most money you could ever lose, but it's also a good chance to make it.
Yeah. Well, it's interesting because, they were looking at GameStop as, hey, this company's dying, right? In fact, folks thought it was going to go out of business. you know, I saw somebody posted something where like, basically it's just a place people go to trade Pokemon cards at this point, you know,
Yeah.
because everybody's buying online. And, you know, I think you and I were talking offline a couple of days ago. I mean, you said like, you know, if the most recent Xbox didn't have an optical drive, they basically wouldn't exist,
Yeah.
right? I mean, it's
Yeah.
literally come down to those kind of like nuanced things around their
Well,
business.
that's how I played it. Like I played it way before this came around, so I was long out. But I was playing it based on when these systems were announced. If they had an optical drive, GameStop stays around. If it was just a hard drive, they're done. So I knew that, well, I wasn't positive, but I was pretty sure that they were going to create that resale market by having optical drives.
Yeah.
And they did, but the stock didn't do shit. So I didn't make it. I didn't make, I'm the only person that ever bought GameStop in the last like year that hasn't made any money on
it. Well, so a couple of things about that too. I mean, so I saw some stuff though. I mean, GameStop, you look at it, you know, from a fundamental standpoint, I mean, the business has cash. Like it wasn't awful, right? But it's
So they
just
have
that,
cash now.
well, now they do, you know, but from
They
a
did
Did they
business
sell any
$200 million.
shares? Did
Yeah,
they,
they
did
sold. So that's the lucky part is they had already put out saying that they were going to buy or sell shares to raise some capital, and then they looked at it and like, well, why don't we just go ahead and instead of doing 100 million, let's go ahead and do 400 million and sell a tenth of the shares we were going to sell for the 100. So they're actually going to be debt free here. I believe the number is going to get them out of complete debt.
Oh
Just
man,
through
and
that
Matt,
sale.
yeah.
So
How do you feel? You're the execs and stuff. You're like, hey, I'm still doing my thing here at GameStop. You know, you got your LinkedIn profile kind of rocking. You're thinking about where you're going. All of
Hey,
a sudden,
listen,
it's like,
don't be fooled, right? Like, so now they got no debt, right? And they got a strong balance sheet. Now they're going to go raise debt, buy Bitcoin. And next thing you know, it's a $500 stock.
yeah,
Again.
yeah, hey, I mean, the MicroStrategy model. And you know what? Like, we're going to talk about some crypto too. And one thing I think we got to, you know, so for folks, you know, it's the subreddit, like you mentioned, right? Everybody knows what Reddit is. Wall Street Bets, you know, the one dude who was like the catalyst of this whole thing. And you broke the seal on the language. We're probably going to have to put a parental advisory sticker on this show because dude's name is Deep Fucking Value, right? And he's the dude, guy,
My
gal,
man.
like he's the dude, you know? And
He is that dude. He is
and
that dude.
interestingly, though, like he was made, you know, he started this play, you know, this has been bubbling for a minute. It's not like, oh, hey, I mean, this thing
yeah,
blew
in the
up over,
fall.
you know, yeah, this thing blew up over, you know, 5 or 6 trading sessions, right? And obviously it's taken on this whole enormous like movement, but, you know, but he was messing, like you said, since the fall when he was posting, maybe even earlier, you know, once he recognized that the short sellers, right, which this big bank, this big hedge fund, Melvin Capital, you know, recognized that they were short 136, 140% of the actual stock, right? So, you know, said, hey, the math doesn't work for these guys. And, you know, and I think that a lot of folks too also look at it like, you know, you got this hedge fund that's shorting an actual like business, right? That has stores that people go into and interact with human beings. And they're like, this is some bullshit. Like, you know, you're basically betting on these businesses to fail. It's like the people betting the
Well,
don't
it's
pass
bigger than
line.
that though, too. It's bigger than that though, too, because the money they're using to short this stock is money that came from, you know, all this stimulus, right? It's like, you know, all this monetary stimulus, like, you know, when the Federal Reserve says, oh, we're gonna, we're gonna issue $1 trillion in new issuance, and it's bought by the Treasury, and then that money just goes straight into the hedge funds, right? Like that's how they put it into the economy, right? It's not, it's like, here's a $600 check for you. That's a total of $300 million. The other $700 billion is going to go to the hedge funds, right? And they're going to put that money in the economy. Well, what they're going to do is go out and short companies like GameStop, right? And put them in the ground. And so I look, deep fucking value, like I'm
Yeah.
with you, man. I'm with you. Like, let's take it. I want to, just execute these people. Like, let's go.
Well, yeah, man. I mean,
digitally execute. Like,
yeah. Look,
let's go. Right?
the revolution will be digitized. And
That's it, man. You're hijacking me.
I know
That
you
was
said
my
it. That's,
line.
hey,
The
man.
revolution will be digitized.
Exactly. You
Like,
said that earlier. This can be the title of the show. You got to give all props to Drew for that. But yeah, man. I mean, look, like you said, like they're taking tax dollars effectively, using it to short against actual companies, which will lead to people losing jobs. I mean, look, you don't want businesses to operate inefficiently and everything else and all that kind of stuff. But, I mean, look, I've gone in and bought enough games over the years. Here's the thing. I'm probably an example of the type of person that the reason GameStop isn't as wasn't doing as well, right? I mean, we buy our games, I buy them off Amazon and everything else, but there've been plenty of times over the years gone into the stores, interacted with these are people like the GameStop in the neighborhood, like, or, at the mall or whatever. Like at the end of the day, these are real people with jobs and lives and all that kind of stuff. So, it just seems super like for the people, un-American, if you will, to
But
like.
and I'm going to play the devil's advocate here. Is most of the companies so in the stock market, you have to be able to place a bet on the downside, right? Like when you see something that you think is either overvalued or the company's going in the wrong direction, you should be able to place a bet that it's going down. That's it has to work that way. You have to be able to take both sides to even it out. And legitimately, most of the stocks that were shorted are companies that are headed the wrong direction, bad business models, wrong places, and legitimately are headed down. So it's not wrong to think that you should be able to place that bet, but here lies the problem. You can't float more shares than are out there. So you shouldn't be able to.
The risk management.
Short them with a 15-to-1 leverage that can't be mirrored on the other side.
Bad risk management, bad
and that's
practice.
what puts are for too. Puts are, if you want to go to the downside, there's a put option that's there for you to do that as well. The other
that's
thing
the way
is,
it should be done, in my opinion.
Yeah, and there's some mathematical reasons why you short the stock itself, because then you can sell the calls or buy, you can play other things. But the other problem is you shouldn't, if you are any way associated to negative news that's put out there, SEC should shut you down, because once they short, now they're spreading terrible information. They're purposely sending stuff to people to do negative work, and that's just illegal. You shouldn't be able to do that, but they do that. But then we're seeing the other side right now, and again, you see like Elon Musk. I'm one of the few people in the world that I think I don't like him at all. I think what he says is manipulative, and everybody who's ever worked with him has just not liked him. But when he says something, it moves $1 billion, and the way he's able to move things back and forth, he callously throws out there all the time, and it's a big deal when he says something. But I think he does understand, but it's no different than what I said before. If somebody says something negative and it shares a stock, if he says something negative, there has to be some accountability for your words. And I think that's where we're at a scary point right now, is we've got celebrities pushing and moving billions of dollars worth of stuff that's a little scary on its effects. I don't know how to solve it, but I know it scares me a lot on what it can do.
That. Well, so anyway, so going back to so deep fucking value puts in, so he recognizes that they're over leveraged on the short side, and basically says, look, here's the deal. We start buying. I mean, it's simply put, we start buying this. We raise the value of the stock. It gets to a certain point, it's going to call their options. They're going to have to buy more stock to cover it, creating a cascade that if we just keep it moving, then ultimately we're going to get a bunch of dough.
We'll never be able to cover.
And we're gonna.
He explained the short squeeze to him. He told him what a short squeeze was.
Yeah, and then they went and got after it, and and then it's at some point they built up enough momentum that's what happened. How much? So Melvin Capital lost how much money? Do we know? I mean, I know it's known. I mean,
there's been a lot of numbers out there.
It's like billions of dollars, right? And then they had to get.
We still don't know if they actually covered or they didn't cover.
And the Citadel, was it Citadel? Is it Citadel Capital? Is that what it was
called? And Steve Cohen.
Yeah,
because Melvin Capital was one of his like proteges, basically, that like started his own fund, and and then.
But the best part of the whole thing was him recapping his trades. When he'd post his trades every night to show, and he hunkered down. Like, not only did he buy the original, but he kept throwing it in there to the point where I think he probably, I'd have to check, but maybe $500,000 he had put into it. And, it was at like 12 million, and then 20 million. It just kept getting bigger and bigger. And I saw somebody on Twitter that had like the world's 5 richest people, and at number 5, it said deep fucking value. It like had Elon.
I tweeted about this. So what was awesome is that some of these stories, Market Watch and some other things, they're actually quoting the Reddit users based on their names, like Thick Daddy and 69 and like all this stuff.
No, that was the one. Yeah. Like, hey, we got Johnny 69 here. Tell me how you,
Yeah.
That's just great.
But one of the
But that, you know,
beautiful-
look, that's the future. This is what like Balaji Srinivasan always talks about. It's like the future is not about our own identities. The future is going to be this, you know, pseudo anonymous engagement and communication and content, and you know, that's it. I mean, you're going to be talking about deep fucking value and thick daddy. It's not going to be somebody's name.
Well,
in
it
the
can, your
future.
brand can be whatever you want. Your brand can
Yeah,
be
I mean, in the Bitcoin world, it's like, you know, Plan B. Like nobody knows who this dude is. You know, he discovered the most important model for valuing Bitcoin, at least up to this point. You know, there's billions of dollars being invested as a result of a model created by this guy. His name's Plan B. You know, like
Yeah. When I was a trader, you only get 3 letters. Like your trading name is 3 letters, and obviously there's only so many combinations as we know in domaining. So I was later, so it was SXC. That's not even close to my initials. But the first day I come up there, some old guy goes, "What's up, sexy?" And that's what I was known for. Is the rest of the time is sexy.
Oh,
Nobody knows my real
that,
name.
man.
If you ask them if Shane worked down there, they don't know who Shane is. They don't know who Terrence is. It was always sexy. So
that's it.
and you get a nickname. That's your brand identity.
Oh,
It's
man.
deep fucking value. That's me. This is my daughter. Little fucking value.
That's awesome. Well, yeah, man.
So I hand registered or this morning. I hand registered deep fucking domains.
Yeah, that's it.
Only domain. That's how we domainers work too. We see it like.
Well, because here's the thing, right? So
I've never wanted to be a part of something so bad. I swear to God, I mean it. Like I really, my interest in Bitcoin, my interest in domains, all of it, always, everything I do in my life. If I look at the first principles reasoning of why I'm involved, why does it intrigue me? It's about freedom and self-sovereignty. And I have, you know, at the end of the day, I do have an anarchist inside of me. And like, I really adamantly am against the incongruous rule sets that are for, you know, the average person and the hedge funds or the elites, right? And it's like, no, this is it, right? You guys are out of touch, and all the people that are building your systems, all the people that built your algorithms, all the people that built your technology, they're on the other side of this trade, and they're going to take your head. Yeah. And I think this is the beginning. I think this is literally I think that Satoshi Nakamoto, with the publication of the Bitcoin white paper in 2008, after the first round of massive government fiscal stimulus, which is straight up highway robbery from the taxpayers, that was the inception of Bitcoin. That was the beginning of the war. And this deep fucking value was shots fired across the bow. The battle's on. And it's very, very interesting. The best meme I saw yesterday was, it was about Robinhood, and it was something like, you know, you fucked up when Ted Cruz and AOC both want you dead.
Well, you know, this is the thing, right? And this is, I think, the sort of the next piece of this that's important, right? So then, you know, the Reddit gets shut down. Robinhood stops letting stops letting its customers actually buy the stocks, which included
we'll let you sell your position,
AMC,
but
BBB.
We won't let you buy any more stock.
Yeah, so you know, it's almost like a deplatforming, right? Which I think is.
So do you know why they did that? That's what you need to talk about.
Yeah, to cover 100%. I mean, you know, it's not a Robinhood decision, right? It's the
So the deal flow is the Citadel is the deal flow for Robinhood. The reason Robinhood is free is because someone pays Robinhood to take all their trades and take the deal flow. So you get a shitty fill, first of all. If you're on Robinhood, you get a shitty fill. Most people don't really care that it's a couple pennies off, but it's a couple pennies times billions and billions of trade. But the problem is Robinhood has to put money down for all this active trading. It's not free for Robinhood. And they did get, I'm making up the numbers, but I think it was like $600 million to send all the deal flow. But you also have to put down a ton of money for these clearing. You know, it doesn't clear automatically. So there's got to be some insurance money and some deposit money. they didn't have enough to do this. They were going to go bankrupt. Robinhood was absolutely going to go bankrupt. So they needed an infusion of capital, and they got it. But guess who's giving them the capital? The people that are getting crushed by the people that are trading. So it's this big circle.
It's like, listen, I sincerely believe that we are at war. And I don't think that people recognize that as such, but we are. And if you look back at previous wars, that's what the bankers do. They finance both sides, right? It's the Rothschilds were financing both sides of the war. I mean, Citadel is financing both sides of this war. It's interesting. I think that it is important to step back, and even if you don't agree, to reassess the way you see the world in the sense of, are we at war? Is this a generational war? Is that what we have here? What is this?
Well, and I think a lot of people would say that. I mean, you've got
it is a lot more than a sideshow. It is a lot more than just a hiccup in equity markets.
Well, yeah, 100%.
All of these things are tied together, whether it's Bitcoin, what's happening with Wall Street bets and deep fucking value, whether it's it's all of the social discourse, all of it. It's all connected.
Yeah, and I think one thing, so politicians a lot of times, they talk about the elites and all that kind of stuff, and more often than not, these are elites themselves that are just, kind of trying to drum that up to get this, sort of swell of populism, like, hey, regular guy, little people, like, I'm your champion, I've got your back and all. When it's really, disingenuous, it's all bullshit. But in this case, you got like Dave Portnoy from Barstool Sports, who's, Davey Day trader and everything that he's doing. He's become like a mouthpiece for sort of this Wall Street, like this public face. He's going on all the shows and everything else, because, I do think when you talk about war and, that this revolution, I mean, in this case, you really do have the establishment, the suits, as he calls them, right, against, the regular people. Right. I mean, there's no doubt that, and you've got folks pulling strings and, and you see what happens with Robinhood and all that kind of stuff. And it does bring up this issue of deplatforming and some of do we really have a free market? Or now people are sort of recognizing like, hey, the market manipulation is real. A lot of times people aren't paying attention. They don't care. They're making money. It's part of the process. They just accept it for what it is. But what we're seeing now, because of social media and the ability for people to have a voice and for these kinds of things to be happening through technology and apps and platforms and everything else, like, it's coming to light in a way that it's not business as usual. So now it's a whole new ball game, which is just really, really wild. And, you do have this thing where you've got regular people, customers, kids, like, the younger, newer generation getting into all this stuff. And then you've got the establishment, which for a lot of folks are the hedge funds, the old folks, like, even Steve Cohen, who I'm not a Mets fan, I'm a Phillies fan, but I like Steve Cohen. He seems like a good guy. I've got a lot of friends and family who are Mets fans. They like him a lot. He actually made a comment though that I thought was so tone deaf, where he said something like, I'm just trying to make a living out here. You know? And it's like, dude,
it's like, poor Stevie.
You know what I mean?
Did you see him going at it with Portnoy on Twitter?
Yeah, that's, I think, where
Portnoy called for him to be put in jail. And then Steve wrote him like this. I mean, it was pathetic. He responded. He's like, hey, Dave, why do you have such a big problem with me? Why don't we take this offline and talk it out? Yeah. And it's like, you little bitch, Dave's going to eat you for dinner.
Same thing. He's going after him. He's going after the Robinhood guys. For the people who don't know, so, Robinhood, when they shut down the trading for, like you said, they would allow you to sell, but wouldn't allow you to buy, which effectively hinders the ability for the stock to go up any further, right? I mean, effectively 100%. Picking sides. And, so Portnoy flipped out, obviously. And again, he's kind of like become the people's champ for that. And, but then the other guy, the other billionaire hedge fund guy, Cooperman, I guess, some of the comments he was making. I mean, these guys come off like out of touch, old, super like shadowy rich dudes. And, like, that
but
really
they are. That's exactly what they are. So is every member of Congress almost, right? And so is every member of the Senate. Like, they're out of touch, and the world is changing rapidly, particularly right now. And there needs to be a transfer of power. There needs to be a transfer of wealth. And here we go. We're off to the races. As far as I'm concerned, this is it. We're in the midst of this, and it's the game is afoot, as they say.
Well, yeah.
You don't want to be on the wrong side of this. I'm telling you right now. You do not want to be on the wrong side.
Here's the one thing that I can tell you through the test of time, that passion will always trump math.
100%.
But math will eventually take over again because passion comes and goes. So, but there's nothing more beautiful than watching.
But where's the math here, Shane? Where's the math?
So the math is the person that can trade the fastest, the person that can get the deal flow. I mean, Robinhood was a scam from the beginning. You're trading your free trades for somebody to control your deal flow. That is a scam.
Yeah.
So you were already set up to fail by being the second. You were feeding the beast by joining Robinhood in the first place. You know, if you're not paying for something, you're the fish. I mean, you are.
Yes.
So, you know, again, for people to say, "Oh, I can't believe they're doing this." You're on Robinhood, and you're not even smart enough to know that you were.
God.
Yeah, I mean,
market just opened. MicroStrategy 675.
Oh my gosh.
Opened up $100.
Yeah. Well, so let's talk about that. So Bitcoin, crypto, I mean, that's going to be there's no doubt,
it's the same fight. It's the same
Bitcoin
fight.
cooled off, but now it's popping. Elon Musk is tweeting about Bitcoin. Like the floodgates are open, and
Elon changed his Twitter profile to just say Bitcoin, like Jack. And then he tweeted, in hindsight, I guess it was inevitable. And here we are. We're up 20% today.
Yeah, but look at Dogecoin.
And MicroStrategy stock, you know, they reported earnings last night. He says, look, we're never selling. In his earnings call, he's like, we're never selling. Yeah. We're only, you know, not only are we going to continue to put all our free cash flow into Bitcoin, we're also exploring more ways to buy more Bitcoin, which basically just means, hey, I issued $600 million in debt at 0.6% interest. It's sold out in 5 minutes. And my stock doubled since then, right? How about I go try $1.5 billion in debt at 0.6% interest? Let's see what happens then. It'll sell out even faster than the last time. This is a compounding thing. And that is also war. That's war. I don't care what you say. That is a direct attack on the US dollar and on the Federal Reserve, which should be shut down. It is the greatest cause of inequality ever known to mankind. It is a greater force for inequality than slavery. And that's a bold statement. But the Federal Reserve is an absolutely atrocious institution. Absolutely atrocious.
Yeah, but okay, so I'll play devil's advocate. It doesn't scare you that 4 people in Bitcoin can change the entire market? Like Saylor, Grayscale, Winklevoss twins. Like there's
4 people in the stock market can change the entire market. One
but not as easy. Not as easy as 4 people in Bitcoin.
No, bullshit.
The whole market.
Well, so let's talk about this.
Here's the thing that people forget about Bitcoin, right? So there's a range. At any given point, there's a range in which it's even possible for it to trade. The upside is actually not generally limited. It is to some degree, but the downside is always limited because the float relative to the total amount of issuance is very small. The amount of Bitcoin that actually trades in the market, you know, the marginal price that gets traded of a Bitcoin is it's a very weak signal for what the entire pool of issued Bitcoin is actually worth. The spot price at any given point is an extraordinarily weak signal for the overall value of issued Bitcoin. That's a really important thing for people to remember, and nobody seems to even pay attention to it. Because Bitcoin crashes 20% when there was low volume trading happening, irrelevant. It really means nothing to the price unless you decide you want to sell that day. But the vast majority of that Bitcoin, above 80%, is held by people who have no intention of selling. And maybe they would if the price goes to 100, right? But they don't care if it's 40, 50, 30, that's irrelevant. 70 to 80% or more of all the Bitcoin that's ever been issued is held by folks who have no intention of selling within that range. And so until Bitcoin moves to a new range, and then you have new metrics about who would sell on the downside, who would sell on the upside. But the higher we go, the lower the smaller that range gets. And so, which by definition, over a long time scale, means that you're smoothing out volatility, right? So 20 years from now, it'll be extremely non-volatile, but the price will be, you know, wherever it'll be, but it'll be most likely a lot higher than it is today. Today, the price of Bitcoin, let's say, you know, it's only a marginal amount that will, let's say, change course if, you know, one of those big players changes course. You know, if suddenly, you know, Paul Tudor Jones says, yeah, I changed my mind, we sold our position. There's going to be a bunch of people that'll sell, but, you know, the let's say the downside pressure, like I guarantee you, it doesn't break 20, maybe 19, right? Doesn't happen. Doesn't matter who sells. It's not going there unless there's new information under the sun that affects the actual protocol.
So how about this? If Warren Buffett says, I'm pulling all my money out of the stock market, that I believe the stock market's out, and Michael Saylor says, I'm selling all my Bitcoin, I don't believe it anymore. Which one goes worse for people?
I would say the stock market goes worse. I believe fundamentally you'll never see Bitcoin. I don't care what happens.
So whoever's watching this in the comments, put your thought on that.
Yeah,
Warren
exactly.
Buffett,
I'd love to.
Yeah,
I'd love to get some.
Love to get
some
poll.
audience
no longer
feedback
believes
on
in the
that.
market.
And all right,
we
so
need to do a Twitter poll on that. Actually, I would love to know.
that's a great
Because
question.
to me, that's a
question.
similar thought, right?
That's a
Those are
great
equal
question.
Yeah,
people.
totally. Great
So,
question.
What about Dogecoin? Dogecoin, right?
Doge.
Like, you know, what do we think? I mean, it started as a joke. Elon Musk got busy.
It's still a joke. Let's not make any, you know.
But it's no
still a joke.
different. If it represents value to people, it
It's
represents
culture.
value to people.
It represents culture. That's what it represents.
Yeah.
To me, Dogecoin is like a collectible. It's a statement. It's like wearing a certain type of clothes, or it's like, you know, collecting some. It's culture. Somehow it's culture wrapped
like a
into
badge.
a dog.
To be part of the vibe and everything. I mean, because here's the thing, because Elon Musk tweeted about it, you know, a while ago, and you know, and it seems to be, you know, in that same pocket, you know, maybe not the exact same crowd, but still the same kind of, you know, meme culture, you know, shit posting / like, you know, tech savvy, you know, intuitive type of thing that's starting to build momentum around, you know, and it's gone, you know, it's at 7 cents now coin. It's gone up like 800% in the last day or two. And, you know, it doesn't have, I guess, a lot of utility, right? But now you've got even like Big Cat from Barstool tweeting about it. Like people are just jumping on it because it's like now it's some cool shit. And it's like, is it any different than, you know, a collectible that's, you know, I guess the question is like, can you get in and then get out and make some money before it's not a thing anymore, right? I mean, what do you think? Does it have legs?
I think you just don't mess with it. There's enough places to put your money today and speculate. I'm not sure Dogecoin is the way to do it. I would do it like if I could buy it on Coinbase, like I'd do it just because
But they don't have it on Coinbase, do they?
It's not tradable on
No.
Coinbase.
Or
you can actually get it on Robinhood.
No.
But who's going to use Robinhood anymore?
It's not a real thing. It's a joke. I mean, you know, it's culture. That's all it is.
But if I bought it at a penny and sold it at 8 and got the money in my account, guess what's real?
Hey,
now?
that's real.
That's what I mean. I think, does it represent opportunity? I mean, I think it's got legs. I think it's going to keep buzzing and do its thing. And, you know, I think the people.
I think you probably have similar odds putting it on black or red in a casino.
All right, that's fair.
Yeah.
So, well, none of this.
Yeah, I mean, my problem is I'm a terrible wave rider.
Yeah, and none of this is investment advice, right? I mean, like we're just giving our opinion on just what we think personally about different stuff, but we're not telling anyone to do anything or giving anybody.
But I will tell you, I mean, no matter how I slice it, I do think all of these things that we've talked about today, all of it, it's all related, and I think that at the end of the day, what people are going to realize is that there's good cause for what's happening, right? This is pent up, you know, frustration and anger and this generational divide and tone deaf regulators, tone deaf politicians, and really, really smart young generations that are like, I don't care what you all have been doing. We're going to do things our way. And if you get in our way, we're going to crush you, but not in the way that you guys used to play. We're going to do it differently. And they control the pipes. You know, these are the people that are building the software. These are the people building the algorithms. These are the people that are making the world turn. And so, you know, that's where every revolution starts. And so I think it's a revolution. And I think that when you do the math and you extrapolate it out, you go, Bitcoin is the ultimate FU. And I hate to even go there because I'm not, I'm not trying to promote it in that way, but it is a counterbalance. It's a counter check. It's as Chamath says, it's like Bitcoin is schmuck insurance. And we've got a lot of schmucks in government and in politics and in regulation and in Wall Street, a lot of schmucks. And might be time to buy some schmuck insurance, and you're taking dollars. The only reason that I don't want to go there because it's a little too anarchy, but ultimately the only power that government has, any government, is the ability to issue money, because that is their ability to control military and exercise military power, whether that's through a police or foreign military. And you're literally defunding the government by buying Bitcoin. There is no other argument. You're literally defunding the government by taking dollars and putting them into Bitcoin, which is outside of the financial system. So I think that math will ultimately add up to all these Wall Street bet folks. And I think that becomes the ultimate short squeeze, like literally like the ultimate short squeeze.
Well, yeah, I mean, and I think at the end of the day, like you said, I think that group, is very much aligned with, it's just sort of this new wave, you know what I mean? It's a lot of smart, digitally tech savvy people, this generation. It doesn't necessarily just an age thing, but it's like, folks that understand digital assets, folks that understand crypto, understand the purpose behind it. And we're so early in so much. And, so
well, what scares me about this is, I'm that person. I've written for decades that I have no risk aversion. Like, I'm the guy that's been buying and selling calls all along. And my needle doesn't move at 100%. Like, when people told me Bitcoin is going to go up 10 times, I'm like, oh, is it broken or something? Is that all it's going up? I'm used to. And so, but I'm afraid that this whole new generation's got my bug, because 100% return is going to seem like nothing to them. And
yeah.
And if you're part of the revolution and they come join you, it's going to be a nice ride. But I can guarantee you, when the next thing comes up, they're going to look for that next ride, and it's not going to be.
Oh yeah, that wave's going to crash hard. I am in no way saying like you want to be, on the long side of the GME trade or on, any of this stuff.
Yeah. So ride the wave, and definitely, again. And I'll tell the story. I remember I was in Celgene a long time ago, and there's this guy on the board when there were old bulletin boards on Yahoo Finance. And he was telling us about how this drug was going to be revolutionary. And for years, no different than the Wall Street bet guy, just pounding you, this. And then 10 years later, this drug that used to make babies have flippers called Revlimid cured cancer. And Celgene got sold out for billions of dollars. And there is nothing more gratifying than watching someone tell people for years or decades or months, in this case, how something is, what's going on in the reality, and then him make millions from that information. I love people that are passionate,
totally
stick with it, and then are rewarded for their passion. So deep fucking value deserves the cash.
Yes.
And so I love those stories. That's where people like, well, nobody backed me. Well, shit, stick it out. If you truly believe in it, your time will come, and this is proving it. But you also got to realize where you are in that wave. He is surfing the wave, and everybody's behind him, but somebody's going to bring their surfboard out there, and they're going to crash into the rocks. You just don't want to be that guy in the rocks.
Yeah.
Well, and I think, Shane, we've had a lot of conversations, and you're not averse to taking money off the table either. So I mean,
no, I'm.
I sold my Bitcoin.
I sold my Bitcoin recently to move over to stocks. Now it's moved to Bitcoin since, but I'm a profit guy. Like, I pay for my shit with money, and I
love that.
I always keep 10% of
my shit with money.
That's fucking awesome.
And I keep 10% of it. Like, I think Bitcoin needs to be part of your portfolio. It does not need to be all of your portfolio, because you have to do stuff. You have to invest in yourself before anything else. If you're, I got businesses to run, and that Bitcoin rise made me a lot of money. Bee House Honey is being paid by Bitcoin. All my stuff is being paid by Bitcoin. That's going to return better than Bitcoin, and it is thanks to Bitcoin. So I'll always keep money in there. But opportunity is opportunity, and I'm hoping to go crush it in the stock market with that Bitcoin money, and then come back and buy more Bitcoin than I started with. So, I know the value, but I like to move around.
It's
I'm
deep,
not
deep
quite Wall
fucking
Street.
value.
Deep fucking value, baby.
And I'll take that money
That's my
and put it
man.
into an option. I have no problem putting all that money into an option and letting it ride, because that's how it works. If it's your side money, if it's your 10% money, this is amazing. Like, this is when we tell you to put 5 or 10% into high risk stuff, boom, it's sitting right in front of you right now. This is how to take your 10% and make it another 100%. So it's, man, I get excited. It's hard to work. That's what Andrew and I are saying.
It's so unmotivating.
Between Clubhouse and this market, I am worthless. I'm going to get fired from my own business.
So, but you know what's interesting?
Fire yourself.
You know what's interesting is that I think it's a signal of a cultural and an economic shift whereby, and this isn't my own thoughts. This is actually from I don't know if it was, I think it was Balaji also, talking about that. Basically what we're entering is a new paradigm where basically everybody's job is going to be professional investor. So long as we have an environment where you've got zero interest rates or negative interest rates, you don't have a choice. I mean, you go out, you earn money, let's say, whatever it is, you make a lot of money, you make a little bit of money. Doesn't matter what you need to, you can no longer just say, oh, I'm going to go put it in a CD at the bank. I'm going to buy a treasury bond. That was a great way to like plan for your future and risk-free invest your money and know that it was going to be there or increase over time while you were out doing whatever it is you do as a profession. But now you have no choice. You have to be a risk taker. It's not an option. There's a gun to your head and it says either go invest into risk assets, or we're going to just simply take 15% of your purchasing power annually indefinitely. And I don't really see how that regime changes until this system basically resets.
Yeah, I mean, here's the problem.
I don't know what they're going to do.
The problem is this. So we talked about on the last show, the Vanguard Simple Growth Fund, just one of the common growth fund, returns 60%. If you were in a conservative model, your neighbor made 60%, has more money, and me as a business owner, there's so much money out there, I'm raising prices. He's got the money to pay for it because he made 60%. You didn't. So everything's going to be more expensive to you because everybody else is making that kind of money. And if you tell me you paid off your house, oh, my house is paid for. Shit. You actually paid off your house when you can get 0.5% interest rate on your house. Take all that money and invest that money. I mean, you look like a fool. Like, I'm buying the Bronco and they got, 0% or 0.5%. I could pay for it. Why would I pay for that car if they're going to go 80 months at 0.5%? There's no reason for me to pay for that car.
Give me that free money.
I'll take it all day.
So how does this, let's tie it back. How does it relate to domain names, right? So domain names.
Well, it's interesting. I mean, on first look, I'd say, for the next couple of years, it's super bullish because it's all tied together and it all leads to individual sovereignty, digital sovereignty, and freedom of communication and information. And domain names currently, legacy root zone domain names are the only way to do that. Now, what's interesting is, and scary is, if we continue down the path that we've been on for the last 6 months, or arguably longer, but it's certainly accelerated in the last few months, whereby you have more and more deplatforming, cancel culture, censorship, the old guard, so to speak, telling the rest of us what we can and cannot do, what we can and cannot say. The more and more that happens, the more and more everything goes decentralized. And there are currently, I'm actually talking about this today in a NamesCon panel, but there's currently two projects out there. You've got Handshake Domains and you got unstoppable domains, and they're building a decentralized, full decentralized DNS architecture. And if we continue down the path we're on, that goes from being a pipe dream to being a probability. And so it is something that we need to be, all of this is actually super related to domain names. It's very important for everybody in the domain name community to be paying attention to. It's easy to write off and say, like, I don't invest in stocks, I don't care, this is some weird stuff on Reddit, I don't care. No, this is a cultural, economic, and social shift that is all tied together, and at the end of the day, all directly relates to domain names. And so I think we're at a tipping point, actually, that over the next year or two, we're going to have to see what happens. Where are we going to push back? And in which case, I'd say, all right, we got, at least like the next decade or two of legacy root zone DNS maintaining and continuing, and the supply crunch that we see in .com domain names continues, et cetera, et cetera. Or if we keep pushing further, there will be a tipping point at which point, some progressive big tech company says, all right, we're moving, at least we're going to put a mirror of our existing site on this alternative route. And the moment you start seeing that parallel internet being built on the decentralized root zone, that's it. And I can guarantee you, markets are always forward-looking. The moment that happens, that'll directly, the next day, the next minute, start impacting the value of legacy domain names, because that's it. I mean, so just, you got to be looking, you got to be aware of what's happening out there. And if you start seeing a parallel internet being built, and when I say it's being built, the architecture is there, there's people trading names, that's there, but that's nascent. That's like Bitcoin 2011, bunch of developers, there's no exchange, a bunch of developers, talking about philosophical stuff, right? That's where we're at. But the moment that there becomes a parallel internet where real economy companies are starting to put parallel websites on this decentralized root zone, now you need to start paying attention quickly.
Yep. Well,
yeah, the only thing I'll say is it took 30 years for people to understand domain names at this point. Moving them over to the other one's going to take a while too. So
not really. It will, but once the shift happens mentally, it'll go quickly, because nothing changes for the average user. It's only about the browsers, right? Browsers just have to adopt it.
Yeah.
And talking about markets and domains, one thing I think is interesting that people might want to keep an eye on is Verisign. We've got, there's chatter now with the Biden administration coming in, Trump maybe reinstituting the caps on renewals and things like that were lifted under Trump. I just saw an article that came across, one of the.
Well, to be clear, there wasn't caps were not removed. It was just that they granted them over the course of 7 years, 5 years they can increase the price by 7%.
Yeah. Exactly. The graduated scale to
the cap.
Right. The graduated scale replaced the cap so that they can increase prices. They may revert back to some sort of cap now under the new administration, which, Verisign is basically a printing press for cash, but it could have an impact on their stock price and that kind of thing. I think ultimately it would be good for domainers. It will be good for domain registrants, because it will make domain registrations and renewals cheaper. It'll keep it in line with what they're used to, or at least,
also good for registrars, also good for, basically it's good for everybody except new GTLDs.
And Verisign.
Yeah. And Verisign.
But when you're operating on a 90+% margin to begin with, you're doing okay. So.
Yeah, but it's tricky. I have unpopular views on this. I think ultimately Verisign, I always say everything in life is about, the upside versus the downside. And so if you're a regulator, you're looking at this and you're going, okay, the upside of taking an action here is like saving registrants. And I can assure you that they don't give a flying shit about domain investors. But, real commercial registrants, saving them, 7% annual price increase, not going to register, right? Versus, okay, we're going to put this out to competitive bid. it might switch to another player, and then that person might drop the ball. And if they do, you're talking about trillions of dollars in, loss as a result of any, even for like a 1 hour interruption in the internet commerce. So I don't, that's just too asymmetric for me to the downside. And I don't see regulators making a bold move there in regards to Verisign. So if you assume that Verisign keeps this contract indefinitely, or like at least it's Verisign's contract to drop, it's up to them to drop the ball. If they don't drop the ball, they don't lose the contract.
Yeah, it's theirs to lose. Yep, I would agree.
Theirs to lose. And so I think that, we as domainers should just be owning Verisign stock to hedge against price increases. I don't really, I think if we push too hard up against Verisign, I think at the end of the day, they come and they say, all right, I'm coming for your domain investment business. We're going to just start taking back these names, and we're going to do what the new GTLD registries do. And we're going to just allow second market registrations, at premium prices. We'll let you.
Well, and we saw that yesterday in the NamesCon auction. We saw that yesterday in the NamesCon auction with shout.co, right? There was some confusion as to the source of the domain, and it looks like it came right from the registry. It expired. They grabbed it and listed it and sold in the auction, and it sold for $5,000. So yeah, man, I mean, I think it's interesting stuff, and but we're coming up on time here. So I think we've covered a lot of ground. A big shout out to Deep Fucking Value. Wall Street
Deep
Bets.
Value, baby. Deep fucking value.
The revolution will be digitized. And so with all that, for the folks that are attending NamesCon, we'll see you all out there a little bit later today. Go back and, I don't know if this will be out in time for people to still sign up, but I think they do record the session. So, there's definitely a lot of great value there for people to go back and check it out and even rewatch the auction to get some insight on some of those domains and other good stuff. But anyway, guys, I appreciate y'all as always. This was a great conversation and a ton here, and we could talk for another, countless amount of hours, but y'all have a great rest of the week. And to the audience, as always, thank y'all, and we'll see you next time on Domain Sherpa.
See you.